The financial world is buzzing over a new Bitcoin ETF, gaining attention not just for its crypto exposure, but because of its connection to President Donald Trump. Whether you're a seasoned investor or just crypto curious, this development sits at the crossroads of politics, finance, and technology. So, what's actually going on, and why does it matter? Let's start with the basics. An ETF, or exchange-traded fund, is a type of investment that trades like a stock but gives you exposure to a basket of assets. A Bitcoin ETF allows traditional investors to gain exposure to Bitcoin without directly buying or storing it. It offers regulation, ease of access, and liquidity, making crypto more accessible to mainstream markets. The SEC had long resisted approving Bitcoin ETFs due to volatility and fraud concerns, but in early 2024, a wave of spot Bitcoin ETFs were approved, marking a huge turning point in crypto's relationship with Wall Street. So, how is President Trump connected? While Trump hasn't launched a Bitcoin ETF himself, analysts have noted indirect ties. Digital World Acquisition Corp, DWAC, the SPAC that brought Trump Media and Truth Social Public, has potential exposure to crypto-linked firms, including ETF issuers. Now back in the White House, Trump has shifted toward a more crypto-friendly stance, meeting with industry leaders and advocating for reduced regulation. That policy change has fueled speculation that his administration could support broader crypto adoption and boost products like Bitcoin ETFs. The impact is real. With the U.S. now under Trump's leadership again, financial markets are watching for signs of a crypto-favorable regulatory shift. Bitcoin ETF inflows surged following his election win, and investors are recalibrating expectations based on his administration's approach. Supporters believe Trump's stance could supercharge innovation and remove regulatory red tape. Critics warn of increased speculation and question the stability of a financial ecosystem that's becoming politicized. For investors, the key questions are, what are the risks and where's the opportunity? On one hand, ETFs offer a more regulated way to access Bitcoin exposure. Great news for conservative portfolios. Trump's policies could foster growth, especially among institutions that had held back due to uncertain regulation. But there are also risks. Political volatility can drive rapid market changes, and because many Trump-linked products rely more on narrative than concrete ownership, retail investors should be cautious of hype cycles and unclear fundamentals. The Trump-linked Bitcoin ETF isn't just about crypto. It's about the blending of finance, policy, and political narrative. Now that President Trump is back in office, the market is watching how his administration shapes the future of digital assets. Whether you view this as an opportunity or a risk, one thing is clear: crypto is no longer outside the system. It's becoming part of it. Keep an eye on ETF flows, regulatory moves, and announcements from the White House, because in this new cycle, what happens in Washington can send shockwaves through the blockchain.